good afternoon, good evening, traders from across the globe, and welcome to the weekend webinar, which happens to be our 901st presentation to you out there, traders. These videos are for trading futures markets and how to read graphs. But what I'd like to tell you about this particular weekend webinar is that it is a longer term view. This view that I'm going to show you is for the next few weeks out, and it concerns the S&P market and or our stock market. So remember, we usually do short-term trading live with Oscar, and the videos are geared for the next day. This video is geared for like 3 to 6 weeks, the next 3 to 6 weeks. So please pay attention to what I'm about to show you. As we all know, futures trading can be extremely risky. We all know that it is not suitable for all trading accounts, and certainly if you do not know the risks behind trading, you do not want to be trading in the futures arena. If you do not recognize that a stop can be your best friend, then you certainly shouldn't be trading. Now, for you OMNIs out there, you regulars who know me, you are going to understand what this video is about very, very quickly. Remember, this is a weekend webinar being filmed on the weekend of August 11th, 2012, and it pertains to the next 3 to 6 weeks out. From now, straight out for a few weeks, okay? Traders, what is on the board? Well, let me start with this. Are repetitive patterns pointing again? Are they pointing again? You know, traders, many of you have those dogs. You know, you have those certain dogs that when they see a bird in a tree, it's like, you know what I mean? They point straight out, the nose goes up, the tail goes out. Pointers. We have dogs who point for us when we go after birds. We have patterns that point for us when we go after commodity markets and stock trades. So traders, are repetitive patterns pointing again? We need to take a look at that. Are we heading into a seasonal upturn? Another thing that I would like to take a look at with you using our graphs. Traders, I will say this. I sat down Saturday morning bright and early, started doing my analysis, getting ready for next week, and the analysis that I was doing was geared for short-term trading. It was geared for what am I doing Sunday night, what am I doing Monday? By the time I got done with the analysis, I found myself zooming out and recognizing a wonderful repetitive pattern that absolutely is pointing us towards the upside. And I realized that we are heading towards a seasonal upturn. I will show that to you on the charts again. Started my morning off Saturday as usual, getting ready to do analysis for Sunday through Monday. But bam, I was hit by a ton of bricks. I seen it staring me right in the face. Completely changed what this video was going to be about. Decided to do a weekend webinar with a long-term view and bring you these two questions. Again, I will repeat. Are repetitive patterns pointing again? And are we heading into a seasonal upturn? Traders, the charts I'm about to show you, not very many. You only got to sit here through a few charts, but they are very telling, and I want to show them to you now. Keep this in mind. Long-term view now. We're looking for the next few weeks out. That's what this video is about. For short-term trading, what we're going to do Sunday night, this Sunday night through Monday, come on down to livewithoscar.com. Come into my free trading rooms. Look at the site where the trades will be posted, and I'll tell you what we will be looking at for short-term. I will say this. The wheat is in my radar. That's short-term trading. However, the longer-term view, what's that about? You are going to see right now with no further ado. Let's go look at some charts. Okay, traders, here I am looking at a chart. It's the S&P Cash Weekly Bar Chart. I'm staring at this on a Saturday morning and I'm thinking, really? Is that happening right before my eyes? And clearly I see a repetitive pattern form. And then I overlay a few averages over it and I realize that it is almost a carbon copy of what's happened in the past. And let me explain what that means. Here I am Saturday morning staring at these bars, just staring at this, trying to figure out what's going on next. And it hits me like a ton of bricks. Look at this repetitive pattern. You're looking at a weekly cash chart of the S&P. It's the S&P weekly bar chart. As you can see, in 2009, we put in a V bottom, went into a very nice parallel uptrend. That uptrend stops cold, has a pullback. At the bottom of the pullback, the OMNI averages cross right there, key crossing, and then a rally ensues. Boom, 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 big rally. In fact, a whole leg of a market ensues. But the rally that ensues, which is interesting, V bottom, parallel channel, we drop down, then the averages cross. When the averages cross, the bottom is in, the market goes higher than that previous high and goes up for about 100 points higher. So, V bottom, parallel channel, it stops cold and drops, and when it drops, the two averages cross, which is very rare, traders. When the averages cross, the market stops cold on the downside, starts heading up, and goes about 100 points higher than the previous highs all the way to here. If you'll note, these averages almost never cross. When they do, it's a very meaningful thing. They cross again here, we have a big rally. So now life carries on, and here we go. V bottom goes into a parallel channel. The parallel channel stops and drops. Right at the bottom of the parallel channel, my averages crisscross. The moment they crisscross, this thing starts to go higher. This would be if it just gets to even with this area. It's going to go higher than this area by probably 100 points. That puts us, traders, does anyone recognize where that would put us? Somewhere near 1,500 in the S&P. If we follow this repetitive pattern, V bottom, into the parallel channel, then we drop down. Once the averages cross, the bottom is in and it takes off. If that happens like we have now, V bottom, parallel channel, the drop comes in, my key OMNI averages cross, and the rally ensues. That rally went 100 points past this high. This rally will very likely do the same. Traders, that looks like a pretty good indication of what's coming in the future. This is a weekly chart. This all happens right around the last week of August. We are only second week of August, so it should be building now, which is why this is a longer term view. One last time, V bottom, parallel channel, it stops cold and drops. Then the averages cross and the rally ensues. In fact, an entire leg of a market ensues afterwards. Here we are, V bottom, into a parallel channel. We come down, my averages cross, and we start to rally. This rally should take off just like this one did, and hopefully be a whole leg just like that one. Last time the OMNI averages crossed, major down move. Now they're crossing below the market. So that's what I noticed when I started scanning for repetitive patterns. Then I backed off on the chart even more and I looked at it in this fashion, and wait until you see what I noticed next. Remember, we're looking for the next few weeks out, right? Same exact chart. August 2006, traders, look what happens right here, August 2006, right after it, a rally ensues, last week of August. Here we are, August, last week of August 2007, look at the rally that comes after it. 2008, our crash year, it did not work. We had a major crash. So this one didn't work. 06 works, 07 works, 08's a major crash, and you can't expect anything on the upside to really work, so I get it. 09, last week in August, look at the rally that ensues. 2010, last week in August, look at the rally that ensues. 2011, last year, it didn't happen until September. But look at the rally that ensues after that. It started in September. The 1 year so far that it didn't happen in the last week of August. Here we are now, mid-August. We're coming to the last week of August. We've seen the repetitive pattern, right? We came out of this parallel channel and that parallel channel, and the averages hit down here. We're on our way up. In the end of August, you gotta love what you're seeing here, traders. Let's look further. This very same chart now, overlaid simply with the OMNI averages. Look when the key OMNI averages cross here. Look at the major drop that ensues. Once they cross again, look at the major rally. They've crossed again right here. You've seen the repetitive pattern that takes place in this area and that area. And we have our OMNI crossing key major averages. Traders, for the next few weeks out towards the end of this year, who knows how long it'll take, that is a very bullish look. Very same chart now. You've seen each August pointed out to you, and you've seen my OMNI averages. Let's look at what else this chart has. This chart has a parallel channel that's working really well a lot of room above the channel, traders. Once again, all the way to that 15 mark. If we can get that high, another indication that the S&P does want to move somewhere near 1500. Now, some of you don't want to buy this, that this parallel channel will never go that high. So for you traders that don't buy the parallel channel, you have to buy the crossing of the omnis. You see how well that works. And at the end of each August, September 1 year, but just about the end of each August, we have our major rally start. If you do not believe in the parallel channel theory, let's go down to analysis 101. Let's keep it simple. Let's simply take the weekly chart and draw the resistance from the last high to the previous high, extend out to where we're going now. That takes us up to 1445, 1450 at the minimum. Still a good 50 points away from where we are now in the S&P. So at minimum, we should get up here and test this once again like we did here and like we did here. And once we get above that, you should clearly make its way up here like it's done each time it had its major rally. Traders, after that repetitive pattern, it went all the way up and touched that line. Here we are again, that repetitive pattern I showed you. The Omni crossed here, the Omni crossed here. We went up and touched the line. The Omni crossed here. We should go up and touch that line before this year comes to an end, if not sooner. Traders, you should be seeing this chart the same way I'm seeing it. And what you should be seeing is that repetitive patterns do work. We are in a long-term parallel channel heading for the upside. And at minimum, resistance is $50 away with long-term view in mind. So traders, make sure you're looking at the chart the same way, and if not, you come on down to livewithoscar.com and allow me to teach you how to view these charts in a live class right here at my site. Okay, traders, that's pretty compelling evidence. If you don't think that's compelling evidence, then go and do it yourselves. Or like I said, come on down to livewithoscar.com and let me show you what I was looking at. Now, we do have to watch for this because last year it didn't really start until September, towards the end of September. But every other year, boom, by the third week in August, you are on your way with some pullbacks along the way, but mostly higher for the rest of the year. That is what the chart showed us. So for the next few weeks going out, with some pullbacks, you will not fall in love with the downside. In fact, right here on my board where it belongs, very shortly, I think I'm going to get a chance to rewrite that again. You remember the days where we had don't fall in love with the downside on this board? Well, I have a feeling I'm going to be able to write that again and we'll be able to stay with it. And when those days come, we start trending. And boy, oh boy, would it be nice to get into a long-term trend. Let's see what happens. I can say this. If you are paying attention to the United States right now, and if you are anywhere else on this planet, there is nowhere else to put your money right now but here. The real estate's getting better. Banking has completely shored up. The unemployment situation is certainly better than it was a couple of years ago, and we are much better off today than many of the other countries that fell with us a few years ago. We're recovering at a much better pace, and the world sees that. That is only going to help point us higher, push us higher, and make this seasonal upturn happen. So keep the fundamentals in mind, but the charts almost always point this stuff out first. Remember, I've said this to you in many, many videos, and I'll say it again, but a graph or a chart is merely a visual look at all the fundamental news that's out there and traders' reaction to such. That's all the chart is made up of. So it's all in the chart already. You can't look at a chart without realizing that the news is already in it. That's what we look for. That's why we look for repetitive patterns. I hope they work for you. Traders, once again, I'll see you at livewithoscar.com. And have a great rest of this weekend. I'll see you there Sunday night. And always remember to try to keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening. And you know what that is. Stops are in. Emotions are out. Yeah. Video 901. Are we pointing once again? Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.